The reason that most people are terrible investors, especially when it comes to publicly traded securities, is because of that flashing stock price that's flashing every business day for 8 hours or so. So, what happens is, people's psychology is totally dictated by the stock price. Whereas, like, let's just say you decided to drive through your hometown or any town for that matter, you would see thousands of businesses, right? But none of them have a flashing stock price during the day that where you could buy a percentage of that business or even sell short a percentage of that business. And here's the thing. If you were to invest, let's just say you had $80,000 and it was important money to you, as it should be to everybody. And if you were to invest that in a business in your hometown or any town in the United States, and that business was not publicly traded like stocks are, you would never put that 80,000 into any business without doing a ton of research, knowing everything about it, checking the books, having a margin of safety, like what could go wrong. You would never speculate on it to whereas you could lose it all without even knowing who was running the place. Especially if it's in your hometown, you would say, all right, I know there's 2 or 3 businesses in my hometown that have been around for 40 or 50 years and they have a competitive advantage and they probably aren't going anywhere. So if I need to protect this money for 20 years, if there was a flashing stock price, you would buy, when the discount to the cash flow was there. And if there wasn't a flashing stock price, you would do tons of research. And the first question you would ask is like, all right, at some point, I'm gonna want to get my money out of here. And so how am I going to get paid? So because there's a flashing stock price, all kinds of people do crazy things and lose a lot of money, and they would never do that if they were investing in a private business. I mean, there are people that have lost it all sitting in their underwear on their bed without even knowing who the CEO of the company that they invested in is. They don't know anything about it because all they see is that flashing stock price. That's kind of, in a way, that's kind of how Bitcoin turned out to be so good for those insiders. They're all scammers, right? The insiders that have all the shares, they've been trying to pump it up because at the end of the day, they want your dollars, right? So what it was, in my opinion, I mean, there's a lot of reasons why it kind of turned into the monster that it was, which is a good thing, if you got in on the ground floor, like a chain letter. But one of the things is, and it's the first time that I've ever seen where you really had a worldwide flashing price on something that everyone could speculate in. I mean, because even with the big time American companies, not everyone in every country can buy. And so this Bitcoin is a flashing stock price 24 hours a day. And so anyone in the world essentially can speculate in that. So it's all speculation because there's nothing behind it. That it would be as if, if you have money in the bank and you transfer it. No one ever talks about how Zelle, because you can't speculate in Zelle, right? Well, people send you 2,000 by Zelle, you have 2,000 in 10 seconds. And you can't really reverse that transaction either. I mean, I think technically you can reverse a Zelle payment. And I even think that they've reversed Bitcoin payments. There's been a couple hacks early on that they did, and they could reverse it. So the thing is, like, Bitcoin was a flashing stock price, and it was the first time anyone could ever really buy something and speculate all through the world. And so, like, back to the Zelle thing, let's just say you had a checking account, right? So you can send someone Zelle from person A to person B, and there's no fees or anything. Like, one of the big banks owns it. They started it for whatever reason. They started it, and so no one ever talks about like, hey, Zelle, you ought to go buy Zelle, buy Zelle. It'd be like, because there's no flashing stock price for Zelle. It's a good thing though, right? And so the other thing is, let's just say you had money in your checking account and you were writing a check for an expenditure. Like, even though people don't write a lot of checks these days, the one thing most people do is they write checks for their rent. The people that live in apartments, everyone still has a checking account, and everyone generally writes at least a few checks a year. And so no one ever says like the check itself is worth anything. It's what's behind the check that creates the value. And so, but like, a check's the greatest thing ever, right? But it's the same concept with Bitcoin. Bitcoin is worth zero, right? but they want you to believe it's worth more. You know, when it first started out, it was worth whatever the cash behind it was, and then it became a speculative mania. And I mean, you got to give them credit. It's one of the, you know, it'll be in the last 100 years, it'll be the big one, right? One of the big speculative things. And you know, there's people to say it'll go to zero or it'll go to 500,000. Everyone's wrong. Any opinion you can have on Bitcoin as far as a price is 100% wrong, because there is no price that's right. Like, it works the same if it sells for 2,000 as it does for 20,000, as it does for 200,000. It's the same thing. So like, no, there's no correct price. It's all what's behind it. So I mean, eventually at some point in time, right, you know, there's going to be a big shake out there, and it's not going to be a speculative mania anymore, and it'll just sit there. But you know, the thing could last decades, really. But nobody needs Bitcoin. If you didn't have the internet and forums and people talking about it and people pumping it on CNBC, which is a scam, because how could they ever put a Bitcoin ticker on there? No one even cares. You could go shopping 1,000 days in a row and never have anyone use Bitcoin. But they want you to believe that it's important. And the funny part about it is, all the people that own Bitcoin that are speculating and want a higher price, well, they want a higher price because they want to convert it for more dollars, your dollars. Yet they say they hate dollars, but they're not happy enough with Bitcoin. They got to be able to convert it immediately to a high number of dollars. So that's just the way markets work. And you know, no one calls them out on it. And the Bitcoin people, no one ever admits to how many Bitcoin they have, the big holders, because they're all dodging taxes. They're tax evaders. So like in other things, well, people brag about it, right? I have X amount of shares of stock in Google or Apple, or I own 300 apartment buildings, you know, or whatever it would be. But they never brag about exactly what they have in Bitcoin, because every single one of them is trying to figure out how not to pay taxes when they convert it to real money, which is, believe it or not, it's dollars. With enough United States dollars, you can solve all world problems that are economic related. So the stock market's a funny thing. People's moods get dictated by the flashing stock price. But if you think about investing, you just have to imagine, if there wasn't a 24-hour or 8-hour flashing stock price every day on the company that you're buying, you know, you wouldn't. The value of the company doesn't change every 10 minutes. You know what I mean? So it's easier said than done. You have to think, if you're a real investor, you have to think of it in terms of, if there were not who cares if there's a flashing stock price? It doesn't matter if there's a stock price for 5 years. But 99% of the people can't think like that. I mean, Buffett can think like that, but he's one of the richest people of all time, the greatest investor in the history of civilization. But you just have to be able to think and realize that flashing stock price does not dictate what that company is worth. It dictates what people think about that company, but it's oftentimes not indicative at all about what the company is worth. And so lots of people know it. Few people in practice can think about it correctly, because it's no fun if you don't have extra money. If you buy shares of a company and the price goes down and you can't buy more, well, then obviously that's a painful thing. But if you assume that you're always going to be able to come up with some more money at some point to buy more shares, generally when you're young, you want a low stock market. And so, or even reasonably young, because you're going to be a net buyer of stocks in that time period, and you don't want there to be a market mania. But once again, when stocks go up, everyone's happy and everyone's holding hands, and that's the safety of the crowd, and everyone wants to buy. But that's the most risky time. But if you have a great company that's having temporary problems, or the doomsday narrative is not indicative of the reality of the company, and the reality is just a little bit better than the doomsday narrative, the stock can triple up easily, go up many times, and even the big caps will go up a couple 100%. Tesla went from 300 last September of 2022. In January it hit 100, and now it's pushing 300. I think it was 280 last week. It's about 265 when I checked earlier today. So that's, it almost went up 200%. And so stock price and stock markets, they're amazing things, but there's a lot of things going on that would never go on in a private transaction because of that constant flashing stock price.